It's now crossed to Accra. Ghana's consumer inflation was unchanged at 8.8% in January, due largely to stable fuel and transport costs. At the end of the MPC meeting today, rates were held at 15%, same as the last meeting. To review the numbers, we're now crossed to Accra to speak to Sampson Akligoh, head of research at Databank Research. Thank you so much, Sampson, for joining us. I think it was widely expected that inflation will remain below 10%. But I think what is a bit surprising, though, is that if you look at the currency, if you trace back the volatility we've seen in the cedi over the last 1 year, it's a lot weaker than the 8% change in inflation. But your thoughts on the numbers that we saw today?
Yeah, I think that the inflation numbers were not surprising because the 8.8% that was recorded was not due to mainly any economic factor. It was mainly due to the base strict factor. And what that means is that we've seen, when you look at the monthly change in prices,
right,
between December and January 2013, price increases were on average lower than the same period last year. So and of course, this is on the back of the political transition and the fact that we have not seen any shift in any economic activity or news in January.
All right, let's talk a bit about the cedi before we move on to the MPC. And like I did mention, we look at it over the last 1 year, a bit weak, but over the last few weeks, though, it's been pretty stable. And of course, that's been driven by strong interest in Ghanaian government bonds over the last few months. Your thoughts on the flows that we're seeing and how important they are to the economy right now?
Oh, yeah, so I think that the policies that were put in place to contain the extreme volatility in the cedi has worked. What we have seen is that if you look at the trend, even before this year, you realize that the last quarter of 2012 have seen relative stability in the cedi compared to the period before.
Yeah.
And again, as you said, some of these developments or the stability in the cedi was reinforced by the things like the government issuing long-term treasury bonds that were heavily subscribed by foreigners. We have seen some strengthening of our reserves. We also have seen some strengthening in general of our financial accounts.
Right.
So we actually expect that when portfolio inflows remain stable and we don't have any capital market shock, the cedi would remain fairly stable this year. The cedi would depreciate. Of course, you can see that we currently around about 1% depreciation, but this is in line with seasonal dynamics. So there's no concern about currency rates at the moment.
All right, let's shift our focus to the MPC. The decision made today was to keep that key rate unchanged at 15%. Given the stability we've seen in inflation over the last few months, your thoughts on those that are calling for some easing in monetary policy?
Yeah, I think that the decision of the Monetary Policy Committee reflects that they are overly concerned about the challenges that we have in the energy sector in terms of the continued subsidy of domestic petroleum prices, and of course also concerns about fiscal consolidation and the potential pressure on money market yields to the treasury market. So I think that from the market point of view, we're saying this reflects more pessimism than optimism, and it's not really ideal for the market. So what we would see really is that interest rates are going to be sticky, probably upwards in the next 4 to 6 months.
All right, but you mentioned the issue of fuel subsidies. It's a big social issue in Nigeria. I imagine it's the same in Ghana. Where do you see that argument going? Do you think that we're going to see a removal or, if anything, at least a reduction in those subsidies? Given where oil prices are now, they're now testing $120 per barrel.
Yeah, I think the debate about first subsidies in Ghana is even a more difficult one than in Nigeria, because even in the case of Nigeria, the Sovereign Wealth Fund, for example, might even provide a sort of cushion, and then it becomes a debate as to Nigeria wants to subsidize fuel or they don't want to subsidize fuel. But in Ghana, we have significant stress on the fiscal front.
Right.
And actually, subsidizing fuel prices put enormous amount of pressure on the budget and leads to interest rate hikes especially on treasury bills. So ours is that we don't have enough fiscal space to accommodate any subsidy, and that is a challenge that we have as a country.
So you think?
Okay,
go ahead. I was going to ask: are you tending towards the argument that they would remove those subsidies at some point this year?
Yeah, I think for us in Ghana, the argument is that the subsidies would have to be removed. I think that even as much as we talk about the government subsidizing, providing a subsidy on domestic petroleum prices, the practical effect is that government is actually in arrears in fulfilling some of these obligations. So I think that yes, we are leaning towards removing the subsidy, but political pressures would certainly make it difficult.
But what's your base case scenario in that, with respect to that, especially when we talk about inflation? Do you think inflation is likely to tick higher at some point this year?
Certainly, with the indication that we are having, if the NPA is going to, the National Petroleum Authority is going to increase domestic petroleum prices on average by 30%, of course, the pass-through effect into inflation will be significant. So clearly, that would indicate an upward potential for inflation. But again, we are also revising our inflation basket in March. So we're going to extend the basket and make the basket a bit reflective of current developments. And I think that any inflation forecast for now must take into consideration the structural dynamics. So that may make it difficult. But if we look at the current trend, inflation for Ghana is likely to be within the region of 10 to 12% in 2013.
Right. Okay, quick question and quick answer. If it stays between 10 and 12%, how is that likely to impact the flows into Ghana for those investors chasing yield right now?
Oh, yeah. Another thing that is very, of course, I think that the investors coming into Ghana are more concerned about currency-adjusted risk than real returns. So on the domestic front, I do not think that that's going to be a challenge because yields currently in Ghana, be it on the money market or even the relatively longer data securities, are still attractive across when you compare it to other African countries.